Hello and welcome to this podcast brought to you by Just, the UK's first enforcement market integrator, and Aram, which has been helping organisations to prevent and resolve problem debt for over 25 years, with me, your host Steve Coppard. In this series, we'll be shining a light on issues that impact the debt industry by discussing topics as diverse as numeracy, illegal money lending and behavioural insights. It's time to grab a cuppa as we give credit where credit's due to our expert guests. For this episode, I visited the UK's only large-scale manufacturer of ceramic tiles in the Potteries heartland of Stoke-on-Trent. Johnston Tiles has been in business since 1901. It truly is a jewel in the crown of British manufacturing history. And this may seem like a strange place to visit to record a podcast about debt, but I'd previously met the company's credit controller Andrew Hignett in his capacity as the regional representative of the Chartered Institute of Credit Management, when he invited me to give a talk on the psychology of debt, a subject that we're both fascinated by. And as we continued chatting over the months, it became clear that business-to-business debt and individual debt share some striking similarities. This is largely because both involve people and their behaviours, attitudes and biases. So let's dive straight into the interview and find out more about Andy's expertise and experience in this area. Welcome to the podcast. I'm here with Andy. Andy, I should let you introduce yourself and we'll talk maybe a little bit as well about how we know each other.
Yeah, my name is Andrew Hignett. I'm the Credit Control Manager here at Johnston Tiles in Stoke-on-Trent and also the Regional Representative for the CICM for the West Midlands area.
You and I share an interest in the psychology of debt.
Yeah, the psychology of debt has struck me over the 20-odd years that I've been within credit management field across different industries, different sectors, but increasingly the psychology of debt and how people handle it or don't handle it is paramount important.
One of the things that I was really interested in when we first spoke, Andy, is I don't do much with business to business debt, much more on personal debt. And so to speak to you about actually some of the behaviours and drivers underneath business to business debt seem to come from the same place as personal debt.
Absolutely. Over the years, I've seen businesses with lots of policies and procedures in place, which is necessary and great. But when those policies and procedures are influenced by individuals and individuals' characteristics in the way that they think and handle debt and finance, then that starts to skew the relationship within business to business finance, as it will in personal finance. Some of the attitudes have been literally from my first job of being given a pile of invoices to process for payment, but not being told to process them for payment, but physically being said, here's some invoices, find reasons not to pay them.
That's quite outrageous really as well, isn't it?
It is. Coming from a financial controller of an organisation that I was employed by, is like, really?
In the business world, with the prompt payment code these days, getting the bills paid on time is absolutely critical.
Yeah, and lots of company processes and things that I've mentioned will have the ability to pay people on time, providing all those invoices tick lots of boxes in their policies and procedures. As soon as you get to a stage where it can't process it, there's no purchase order number, there's no reference that the purchaser has requested, then it stops. So then you get the delay process. Not necessarily always out of the desire to stop payment or prevent payment, but because the system doesn't prevent that to happen.
I was looking recently, both the Small Business Commissioner and the Chief Exec of the Chartered Institute for Credit Management, Sue Chappell, they've both been quite vocal about business-to-business debt and the prompt payment code. And one of them went as far to say, I won't tell you which one, you can go and find out. But one of them said that a customer who doesn't pay you is not a customer, they're a thief. And I thought, well, that's really quite punchy, and I was quite pleased that they put it in those terms. So, what's your experience of that?
I suppose by definition, anyone who doesn't pay a debt that is owed without any query, then by definition that is a theft. They've taken goods or services and not paid for them. In the same way that someone breaking into your home and taking something that doesn't belong to them, that's not theirs until it's paid for. That I suppose does stem from the ancient look on debt, going right back to the Romans and Greeks, that a debtor who doesn't pay is a thief and is treated accordingly.
How do people approach you? Because obviously in your business, people have like I guess a credit limit, for example. There's an amount that you're willing to tolerate or extend to them a line of credit.
We always say for Johnson's that our credit limits, whatever they are at our discretion. No matter what credit report we get for a particular company, it's at our discretion. And I will soon find out, based on their behaviour and payment performance, whether they're worthy of that credit limit that I've extended to them or whether they're not. So I always give them that caveat right from the word go, so they fully understand that this is not a right that they're entitled to. I get quite a lot of customers say, I've got credit limits of X tens of £1,000s elsewhere. That's their business, not ours. I only think they're worth so much. And if they prove me right, or even detrimentally don't pay us on time, then I will reduce that credit limit even further.
There's a correlation there, isn't there, with your credit card? So you may have a £5,000 limit, but you still have to pay a minimum amount every month. And
absolutely, there does seem to be rather a strange. I've not come across it in nearly 20 years, but now I'm finding more customers saying, "Well, I've got a credit limit of tens of thousands of pounds, and you've put me on stop." Yeah, because these other invoices are now overdue. I'm not going to let you run up a £30,000 credit limit, which might take you 3 months before you even start to pay us. You've got to pay what's due, regardless of the limit.
Goes back to the underlying thinking, doesn't it? That there's an entitlement to run that up and not pay the invoice on time because there's a facility that's been extended.
Yeah, we have a mixture of customers here of bigger corporations, but also smaller one-man band companies, customers that, in all intents and purposes, are self-employed. They might be limited companies, but effectively, they are one person doing a job. Might have a few contractors, but they tend to think sometimes that debt is the same in business as it is in personal life, and it's not. Well, it shouldn't be.
I see that. I mean, I talk quite a lot about my sort of background, and I'm very much a down the pub on a Friday night sort of person, and I drink with the tradespeople, and often you see, people coming in with their cash in their pocket from their week's work. And is it business cash or is it personal cash? Because it's buying the beer. And is that does that make it a business expense, or how do we account for that? Because we're not getting receipts for each time.
Yeah, we find it difficult to judge sometimes whether someone's paying by a corporate credit card or a personal credit card. Obviously, we can't charge for personal credit card transaction fees anymore for a number of years now. But that clause didn't extend to business. We can apply a fee for transactional charges, and we do point out to them that putting £20,000–30,000 on a corporate credit card is very expensive to us. So we do sometimes say, look, enough's enough. If you haven't got the cash and you must pay on a credit card, if there's a corporate one, then you're going to pay a fee. And we're finding that more and more now, particularly with the well, not just the smaller customers. A lot of them now are coming to me every month when they're due and saying, we haven't been paid, we want to extend it, or we can pay it on credit card. The number of credit card transactions that we get has probably trebled in the last few months. So they've had a credit account, so they've taken credit from us, then they've had to pay it on a credit card. So they're extending their debt even further. How many other suppliers they're doing this to, who knows? It's difficult to judge.
That feels like it introduces even more risk into the supply chain.
It's certainly more risk to us, and the more that I see certain customers relying on credit cards every month, the more questions I have as to their stability and whether they can fully fund their credit card and pay their bills. Some of our debtors not only pay by credit card, but their payments on credit card are starting to stretch even further. So they're not even paying on time, but paying by credit card. So are they able to pay their credit card?
Yeah, in a financial services setting, you wouldn't really accept that, would you?
No.
That would start waving red flags everywhere.
Yeah.
So what do you think the actual cost of failure is? So failing to adhere to the prompt payment code, what's at stake?
The prompt payment code, I believe, is excellent and it should be there. But I think rather than voluntary, it should be a standard that everyone has to apply to. We have accounting standards. We should really have payment standards. It's difficult when you can see the legitimate reason why business would say, I'm not going to sign up to that because I want to negotiate my own payment terms with suppliers. That's fine. And even our late payment regulations stipulate that it's based on what terms you've agreed with a customer and a supplier as to when something becomes overdue and when fees are applied. But to have a prompt payment code of so many days, I think it might be a bit too far, because everyone's an optimist in business. I'm going to make money. This is a great opportunity. I want to do this and make a profit. Fabulous. But when things start to slip and people can't pay, then that optimism starts to get a bit dragged out, and then other people are going to lose out. If a business goes under, then obviously there's going to be suppliers and employees that lose out. The knock-on effects could be huge. We have probably 600 to 1,000 active accounts at any one time. And if a big one goes, we might have insurance that covers that. But a lot of the small ones go, we won't have insurance that will cover the small ones. But if you have 10, 20, 30 that all go under, all owing you a few £1,000s here and there, then that's probably more than having one of your big customers go.
I tended, I guess, to think of the supply chain as quite linear. But I guess somebody the size of Johnson Tiles, you are more like a node in a network.
Yeah, well, I mean, especially having been here 120 odd years now, we've seen a lot of recessions over that century, and we'll probably hopefully see a lot more, providing that we can carry on business, and I'm sure we will. But it's all a balance between sales, balance between purchasing, a balance between our customers being able to pay on time. And as soon as that starts to get more fragmented and people aren't able to keep up with that payment process, with the agreement of whoever's supplying, then it starts to fall down. And I do think that communication needs to be up front. There's an adage that I've heard before where it says it's easier to get, to say sorry for something rather than to get an approval to do something. And the same applies with debt. I'd much rather customers come to me and say, I can't pay you on time this month. Pay you the week later. Okay, I'll work with you. But if you just don't pay for a week, and then 2 weeks, then 3 weeks, and stop talking to me, then I'm going to fear the worst.
We see exactly the same in personal debt, where I think at the start there's a sense of optimism. And of course, as the optimism wanes, there's the feeling of the loss of control. And that tends to bring with it shame and guilt. And that leads to the not engaging with the process. And I guess there's the bullish optimism of, if I can just get the next sale, then I can pay those bills and carry on. But you're actually driving deeper and deeper into debt and potentially dragging more people down with you.
And you've got the risk in the supply chain of not really knowing how the directors and senior managers of a business are running that business. Are they, over trading? Are they, stretching themselves so thin that they're having to rely on payments from one particular contract to fill the obligations of another contract? So they're never really catching up enough to be in a solvent position.
And that brings, I guess, into play, know your customer.
Yeah.
Which in the financial services world, especially on the debt side, is a critical factor to success.
Absolutely. And knowing your customer, it's not just, knowing what entity you're dealing with. Is it a sole trader? Is it a limited company? Who are you, corresponding with? Where are they, etc. It's knowing about them and how they operate, and knowing their way of thinking, really, in how they work. I won't name names, but there's certain customers that we have where I regularly see CCJs go against them. These are big national companies. They have CCJs, they're winding up petitions on a regular basis. And obviously their credit report fluctuates like the wind. But they don't seem bothered. They will take it right to the letter and then pay whatever they need to pay.
When I worked for the tax office, we had certain customers that would never pay it until they got a letter with a Worthing address on the back. And the reason was that's where our enforcement and insolvency service was. And so people knew once they got the letter from Worthing, that was the time that they had to pay. I mean, look, I'm going back decades now, so it's obviously changed a lot. But that was really what got us thinking about segmentation and differentiated treatment paths. Because once you can identify that cohort, well, you just send them the letter from Worthing straight away. And you skip all the other bits of the process because that's what's going to prompt them to pay.
Yeah, with my customer base, I tend to operate on a bespoke basis. I will treat them as I feel that they need to be treated. If I've got a customer that always goes to the next level in terms of delaying and excuses, then I will treat them harsher and more promptly than someone who I know will pay, even if they are struggling from time to time. I don't go through a strict letter process, as a lot of people probably hearing this will go, yeah, going through a proper chain of letters for chasing debt. Well, no, because as you said, customers, even companies, will receive these and go, that's stage 1, that's stage 2. I'll wait till stage 4 come along before I start paying. Some of them will wait till stage 4 before they even look at the invoices. And they might have the same financial controller that I had, who've been told, now you can look at it and see whether you can pay it or not.
What do you think drives that behaviour, Andy? Is there something?
I don't know. I don't know whether it's a desire. It might be the desire or a necessity for smaller businesses in terms of their cash flow. So they will not part with the money until they absolutely have to, because they've got so many people chasing them. Bigger organisations, I really don't know. I don't understand why they would do that. Again, some organisations might not have the finances. Or it might be the individual, either a manager or a senior person, who thinks they're making a name for themselves by withholding payments to a certain degree, keeping that capital within the business as much as they possibly can.
And I mean, under the Companies Act, directors are obliged to act in the interests of the business. And so acting in a way that potentially drives away your suppliers and or your clients is not going to be helpful, right?
No, but I've also seen one example, I can remember, where having a debt build up, a customer then approached them and say, what sort of settlement discount can I have for paying this all off now? You've built up the debt. There is no settlement discount. You've not paid us early. In fact, you've paid us many months late, and now you're asking for a settlement discount. But some people will go for it. You know, they want to just get that debt and move on.
That almost feels like a carryover from personal debt, where debts were factored when they were purchased, and maybe the whole debt book was factored at a price of 40% of the total value. Then the companies that were then pursuing that debt could afford to collect less, because they've only paid 40% on average for the actual debt. And so there would be full and final settlements. And that you used to see an awful lot in the private debt market, in the personal debt market. I wonder if there's that correlation of people doing in business what they also do in their personal life.
It may be, and it may be that those individuals that are employed in these roles have had a previous career in a business which was a factoring business. So they've got that thinking, that ethos. In the same way that, you know, I brought ideas and ways of working into this role from other sectors and other industries that I've worked in before. Some work, some don't. And you very quickly realise, you know, why they don't in particular industries.
What can we do about all of this? What sort of practical steps can we take to improve the situation, do you think?
I think generally we need to start having a conversation about debt which is not siloed into the different types of debt. Personal debt, you know, business debt. Are we always, you know, beating big business in not paying their bills? It's not always big business that's not paying their bills. As I said, we've got several hundred customers active at any one time. A lot of the big businesses will pay me when I expect, despite a few disputes here and there, but they'll pay. And now we have a plethora of smaller businesses. I can't predict accurately enough yet to say that all of these people are going to pay us on the nose. The list of overdues each month is getting longer and longer with smaller businesses. Each one may be owing a few £1,000s. So obviously when you prioritise debt to chase, you're dealing with the bigger ones first. But when you've got 20, 30, 40, 50 customers of 5,000 and less, then that's a sizable chunk of money, but I haven't got the time to deal with that. So it's not always big business that's the culprit. We need to look at debt generally and the way we think about it, and stop, looking at different ways to treat, a personal and a business debt.
One of the things that we take a lot of interest in at both Aram and Just is behavioural insights. And we've been looking recently at the fast and slow thinking that people do. So some is very irrational, very emotion driven, and other is very considered. But there was a paper that goes back a few years called "Clouds Make Nerds Look Good." And just to as a very brief sort of summary of it, it was effectively, you could take two candidates for college applications. You go a week apart, and one day it's sunny and have exactly the same interview, exactly the same grades, and then one goes a week later and it's cloudy. And actually, on cloudy days, admissions officers think about more about the academic stats, and on sunny days they think more about sports and so. But there's also all of the other stuff that goes on in that person's life. Like, they may just have had an argument with their partner. They may have had a massive bill land, and all of that stuff impacts. And it's about how do you try and drive out the same decision in every case, rather than allow all those factors to play into it. And I think there's something around the behavioural insights based on people's individual lives affecting their decisions in business.
Absolutely, and it's borne out certainly within our customer base, the number of individuals, directors of businesses that one in particular I can think of, which did go into administration. And from what I have seen on social media, he seemed to have spent a lot of money on fast cars and other activities. Now, whether he was paying himself handsomely out of the business that went under, or siphoning it from the business, who knows? And we've seen, even bigger businesses going back to Carillion, where things were masked enough to fool auditors over a lengthy period of time.
Just trying to think again about how people can take practical steps. Are payment terms a bit of an afterthought for some people?
Yes, and I think the interpretation of payment terms as well sometimes. Again, going back to previous positions I've worked in, I try to say to salespeople that we'd prefer certain payment terms, X number of days. And I had one salesman come to me quite proud, I've achieved this. It's on the terms that you wanted, 60 days, whatever. And when I looked at the contract, it was 60 days, end of the month, following the second month after delivery. So it ended up being almost 120 days. And I said, well, that's not 60 days. But the wording of it was quite spot on in terms of trying to extend it as much as possible.
There's also a few things you said today around knowing your customer and working together, finding solutions. Those all featured really heavily in a behavioural insights report that Ofgem did about improving debt communications. And it's that feeling of I think there are three parts of the mind space framework that come into play here. There's ego, reciprocity, and there's messenger. And when you use terms like work together, find solutions, this makes you come across to that person as a better messenger. You're not going in really hard and harsh at the first instance. And in terms of reciprocity, it makes people want to, generally, not everybody of course, but for most people it makes them want to give back in the same way that you're treating them. And the ego bit comes in because people generally try to do or prefer to do things that make them feel good about themselves.
Yeah, when I'm dealing with overdue debts here, I tend to set out my stall in my communication with customers by saying, this is what's there. Clearly point out that they're overdue. These are the agreed terms, and set out options for them that they then have to choose. One, they have to acknowledge the debt, but also choose which option they want to go along. Pay now, no penalty, or pay within a certain deadline, but you're going to be charged interest and fees. Don't pay at all, you'll get legal action, and that'll be the end of your account on a credit term. So which one do you want to choose? Put it in their court as to whether they believe that their business is viable enough to continue a working relationship and actually work with me, or say, you know what, do your worst.
That takes me back to, again, there's the definition of insolvency, which is if you cannot pay on demand a debt which is due with cash or assets, then you are insolvent.
And unfortunately, we're seeing a lot of businesses that are technically insolvent.
Yeah. Coming out of COVID, there were probably a lot of businesses that on paper were insolvent. Now, whether they could recover that because some of the government schemes was another matter, but again, it's more risk into the supply chain.
Yeah, there's lots of risks. You've got the way that the economy is going generally. I mean, by nature of our business, we're dealing with the construction industry and DIY. So it's whether there is the appetite in the economy to have new builds. You know, how much, is it going to sustain itself? Is it sustainable? Are we going to see a bit more of a crash? Predictions out there are varied at the moment, so it's a wait and see game.
I wonder, I mean, just again thinking about the overlap between personal and business debt, whether you're seeing any sort of impacts broadly of the cost of living on your customer base.
It's difficult to tell at our sort of side of things. I know that some of the smaller ones, the one-man bands, are struggling. And we've seen evidence of that, and through people, when we discuss the debt situation with them, are saying, I just can't pay you at the moment because of whatever in their personal life. You try and work with them if the best you can. I see no sense in throwing good money after bad. If it's going to be a bad debt, it's a bad debt. What's the sense of employing a solicitor or whatever to go the legal channel and just rack up more debts you're not going to recover? And to put that extra burden on a debtor is a difficult situation, even a business debtor. I just don't see the sense unless you really have to, in which case you're looking at probably insolvency, winding up situation rather than going through a CCJ.
We think exactly the same in the sort of the pure debt world about, and this is why know your customer is so important, but about making sure you take the right action at the right time. So, for example, sheep dipping everyone through to enforcement action, aka bailiffs. Sheep dipping everyone through to enforcement is never the right thing to do, just because it's the next step in a linear process. Because it will add fees, which will detract from some people's ability to pay the principal debt back.
Yeah.
And so you're actually taking an action that makes it less likely that you'll get paid.
Absolutely. And I have to at times, go to my directors and say, this is my recommendation of action, even though they might be saying to me, no, take them to court, chase the debt, blah, 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 blah. It's like, with all due respect, what's the point? You're not going to get it, and you're going to cost yourself another £2,000 in fees. Until it's really pointed out that, yes, there's an argument to say it's just not right. They owe us money. They need to pay it. That's fine. But if they cannot pay it, what are you doing spending more money saying to them legally, you need to pay this debt? They know they need to pay this debt. They just can't. So can you work a better solution? And that's a conversation I think we all need to have, and we need to be more open about debt and money generally. Right from the word go, education, money and debt has always been very secretive. Don't talk about that. It'll be okay. That sort of mentality. Well, it's not. We need to be more open about it and talk about what we need, both personal and business, and find better working solutions. And I suppose to a certain degree, you've got the sensitivity nature, you've got commercial interest sensitivity, and personal sensitivity as well. We don't go around blabbing certain financial data, even in families. Probably less so in families than we should. But those sorts of things are very hidden in our culture. And that's another thing that we need to sort of take into account in terms of the debtor, the culture of that person, where they've come from, their background. In the world that we are now, we tend to still think ourselves as a very Anglo-Saxon country. We're not. We're very diverse now, and those diversity is great. It brings a lot of different ways of working and thinking, and we need to consider that in terms of how we treat a debtor.
So I think one of the other things I've spoken about over the years, and I think we sort of come to today as well, is that the fact that we need a more level playing field. So you've got all these different rules, and actually from the point of view of somebody in debt, that makes it incredibly difficult to get out where they owe multiple people, because they haven't got a smooth journey out.
It does, and that's where agencies such as Citizens Advice and etc. come in and are very valuable and are needed out there. But there does need to be a better conversation between all these major parties as to what's the best course of action and whether we can standardise that approach in the way that they deal with people in debt. And be more open to have people, I don't suppose there are many at the moment, but they need to be more open to people to come to them and say, I'm struggling, I want to work it out, but I need help and I need your agreement to reschedule this debt over a period of time. It's not understanding, waving a piece of plastic or your phone over a device to purchase something is very easy, and we've become this culture of instant gratification, even in the business world. We have customers phone up saying, I want these tiles and want them tomorrow. So we're not Amazon. We don't guarantee a delivery drop first thing in the morning or between certain times of the day. It's
these drones flying up.
So there is that culture generally out there of instant gratification in purchasing, but also it's not just, oh, you've racked up this debt by spending. We do need, again, with all the the look at mental health and mental well-being, we are complex people, complex beings.
Yes, if there's one thing I've learned over the years, it's that people are messy and complicated and don't fit into the neat little rules that we expect them to.
Yeah.
Andy Hignett, thank you very much indeed.
Thank you.
Thank you for listening to the podcast, and I hope you found it as fascinating as I did. If you want to hear more great content from Aram and Just, then please subscribe on whichever platform you use to get your podcasts, or follow us on LinkedIn so that we can let you know when the next one is out. Until then, if you'd like to discuss any of the issues that were raised in this podcast, then please get in touch with me either on LinkedIn or drop me an email to stephen.coppard@aram.co.uk. Once again, my thanks to Andy Hignett and Johnson Tiles for investing the time to talk to us, and goodbye for now.